Everybody, this is Jim at SP500chart.com. It's a little bit before 6 o'clock here on December 15th, 2019. And there goes my phone. Hold on. It was a sales call. So anyway, as I was saying, it is a little bit before 6 o'clock on December 15th, 2019. We're going to take a look at this chart. I have to remind you, the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Looking here on a 30-minute chart, there's our week right here. We closed near the highs of the week. We also closed, well, hold on a second. Let me just say this for sure. Did we? Yes, we closed, or did we? I don't know if we closed higher than the day before or not. Our close on Thursday was 3168.57. Yeah, we closed up just the tiniest little bit for a new record in the S&P 500. Pretty strong stuff. And we did so after we had identified this line of resistance about midweek. And then about as soon as we identified that line, on Thursday we broke out over it. Here's what's kind of interesting, and this is something new on the chart, is, we had this line of support right here. Remember, we broke down underneath that, and now I drew a parallel line to this one, but I dropped it down just a little bit. And lo and behold, that's now our line of resistance. It's almost like there's a little median right there. I don't know what that might be. It's always possible that there's one major player in the S&P that sort of biased the entire index down just a little bit. Does that make sense? In other words, if let's say if Apple had which makes up a large part of the S&P 500, if they had some issues through the week, and I don't follow Apple, so I don't know if they did or they didn't, then maybe that just sort of biased everything down just a bit. But it looks to me right now like, from what I see in this chart, we should have a short-term target now up around 32.29. That's based upon this dip and this little dip here. That would be what some would call a cup and handle pattern. If only we had come up to about 31.55 back in the end of November, then we would probably be saying it's a small inverted head and shoulders. But we didn't do that, so we don't have a left shoulder over here. I think that's what a lot of cup and handle patterns really are. They're just they're either patterns where someone did not pick up on a left shoulder, or like this, we just didn't have a left shoulder. So the week was great if you're long, and from what the chart has been telling us for quite a while, you got no reason not to be, because we have now 3 targets. We got 3370 from this inverted head and shoulders pattern. We've got 3840 from this huge inverted head and shoulders pattern. And then, of course, from our little cup and handle thing right here, we've got about 3230. So everything is looking really good. It's so good, in fact, I really don't have a whole bunch to say about it. We do have a support line right here. If you match this support line with this line of resistance, you will pick up on the obvious fact that these are converging a bit. That means this may be setting up for some weakness at some point down the road, maybe within a week or two. I can't really tell you for sure. Just if this line breaks, then I suspect we probably come back down to the mid, around the 3140s or something like that, as a bare minimum, possibly even coming back for a second attempt at testing support at our neckline in that big pattern. Zooming in on a 10-minute chart, we take a look at, we see how how on Thursday and Friday both, we couldn't get over this line of resistance here. And just from the general sense of things, this looks to be, this sort of looks to be just a sideways consolidation. Where it goes, whether or not it breaks up or down, I cannot tell you for sure, but I can say I think this target up here at 3230 is very attainable. The question, of course, at this point is, if we continue to stay under this line, how long will it take to get there? Well, it could actually take more than a week, which seems kind of, who wants to wait that long for a meager target at 3230? Well, just keep in mind those meager targets and these sort of not terribly aggressive upsloping trend lines, let those things work over a year or so, and they work very well, because this actually is sloping up at a pretty good pitch, as is this right here. Remember, when we take a look at our long-term chart here, we see that the S&P has, for the past decade, been improving its position to the tune of roughly 13% per year. So if we have to wait a couple of weeks to get a 2% gain, that's certainly something that I think we should be willing to do. It may not be as exciting as we'd like, but there you have it, guys. Just everything seems to be hitting on all cylinders, and so far for a weekly review, that's really all I've got. To recap, getting out over this line of resistance that we discovered midweek, and now it looks like we found a new line of resistance right here that couples with this one that is rising again, a slight wedge shape. So that means when this breaks, we're probably going to get some decent selling pressure, maybe to scare out some longs. Remember, the markets have to breathe. They go up, they go down, they go up, they go down, and that's, you don't want something that goes up all the time, because if it does, it's liable to go down precipitously. Remember, markets spend about roughly 2/3 of their time going up and 1/3 of their time going down. As we look at this market over the past 10 years, we've done better than that on the up part of that equation. But just in general, gravity tends. Well, let me change that. In general, your dips happen when people are scared of losing profits. Fear will create more of a, what's the word I'm looking for? Fear will create more of an emotional rush to get out than anything that will attract people into the markets. So the markets absorb money fairly slowly, and then something happens and everybody goes, "Oh my God," and they rush out. So all that to say, at some point we're undoubtedly will have some significant selling, as long as we stay in our proper relationship to our lines of support here, particularly this neckline. Then, guys, this is a great looking chart. So look, hey, thanks for taking time out of your weekend to watch this. And as always, thanks for your very kind support. Take care.